How to get rich according to Warren Buffett. Warren Buffett, often referred to as the Oracle of Omaha, is one of the most successful and renowned investors of our time. With a net worth in the tens of billions of dollars, Buffett's investment strategies and principles have made him a household name in the world of finance. If you're looking to accumulate wealth and achieve financial success, learning from Warren Buffett is a wise choice. In this video, we will delve into the key principles and strategies that have guided Warren Buffett on his path to riches. Before we get started, if you're new here, make sure to hit that subscribe button below and turn on the notification bell so you never miss our latest content. Invest in what you understand. One of Warren Buffett's cardinal rules of investing is to invest in what you understand. This principle underscores the importance of staying within your circle of competence. Instead of chasing after trends or investing in complex financial instruments, Buffett advises focusing on industries and companies that you have a deep knowledge of. By sticking to what you understand, you can make more informed and confident investment decisions. Buffett's own success is built on his expertise in evaluating traditional, easy-to-understand businesses like Coca-Cola, Apple, and Berkshire Hathaway. Long-term perspective. Warren Buffett's investment horizon is famously long-term. He has often said, "Our favorite holding period is forever." This commitment to long-term investing is grounded in the power of compounding, where your wealth grows exponentially over time. Buffett advises against frequently buying and selling stocks based on short-term market fluctuations. Instead, he advocates for a patient approach, allowing your investments to ride out market volatility and appreciate over the years. Value investing. Warren Buffett is a legendary value investor. This means he looks for stocks that are trading at a discount to their intrinsic value. He believes that market prices often fluctuate irrationally, creating opportunities for investors to buy quality companies at bargain prices. To practice value investing, Buffett recommends studying a company's fundamentals, including its financial statements, competitive advantage, and management team. By identifying undervalued stocks and holding on to them, you can benefit from the long-term growth potential. Margin of safety. In addition to value investing, Buffett emphasizes the importance of having a margin of safety. This means only investing in stocks that have a significant buffer between their intrinsic value and market price. A margin of safety provides protection against unforeseen market downturns and ensures your investments have room to grow. By maintaining a margin of safety, you reduce the risk of losing your capital and increase the likelihood of generating positive returns in the long run. Continuous learning. Warren Buffett is an avid reader and advocates for the power of continuous learning. He believes that staying well-informed is crucial for making wise investment decisions. Buffett allocates a significant portion of his day to reading books, newspapers, and reports on various industries. To follow in his footsteps, commit to a habit of learning and expanding your knowledge about financial markets, industries, and economic trends. This ongoing education will help you make informed investment choices. Avoid market timing. Buffett famously advises against trying to time the market. He acknowledges that predicting short-term market movements is exceedingly difficult and that many investors who attempt it end up with subpar results. Instead, Buffett recommends a buy-and-hold strategy. He has stated, "The stock market is designed to transfer money from the active to the patient." By staying invested over the long term, you can capture the overall upward trajectory of the market and avoid the pitfalls of market timing. Be selective and patient. Warren Buffett's investment philosophy is not about making numerous trades, but about being selective and patient. He often uses the analogy of a baseball game, where you don't have to swing in every pitch. Buffett suggests waiting for the right investment opportunities and being prepared to act decisively when they arise. You don't need to make frequent changes to your portfolio. A few well-thought-out investments can lead to substantial wealth over time. Cash is king. While Buffett is known for investing aggressively, he also values the importance of cash. He believes in having cash reserves available for opportunities that may arise during market downturns. In times of economic uncertainty or market volatility, cash can provide you with the liquidity needed to seize attractive investment prospects. Having cash on hand not only protects your portfolio, but also positions you to capitalize on market dislocations when others are forced to sell at lower prices. Warren Buffett's journey from a modest upbringing to becoming one of the wealthiest individuals on the planet is a testament to his disciplined investment philosophy. While achieving Buffett's level of wealth may be out of reach for most, his principles offer invaluable guidance for those looking to build financial security and wealth over time. By adhering to Buffett's wisdom of investing in what you understand, maintaining a long-term perspective, practicing value investing with a margin of safety, continuously learning, avoiding market timing, being selective and patient, and recognizing the value of cash, you can adopt a sound investment strategy that aligns with Buffett's time-tested approach. Ultimately, Warren Buffett's path to wealth is a journey of patience, discipline, and a commitment to fundamental investing principles. While there are no guarantees in the world of investing, following Buffett's advice can increase your odds of achieving financial success and building lasting wealth. If you enjoyed this video, don't forget to give it a thumbs up and subscribe for more content. Hit the notification bell to stay updated with our latest videos. Share your thoughts in the comments below. We love hearing from you. Thank you for watching.